Hey there! Ready to dive into the world of investing? Whether you're looking to save for retirement, fund an education, or achieve other life goals, investing is the way to make your money work for you. Let's break it down. Investing 101. First off, what exactly is investing and why should you do it? At its core, investing means allocating your resources, usually money, with the expectation of generating income or profit in the future. It's essential for building long-term wealth and hitting your financial targets. Think of it as planting seeds today to reap the harvest tomorrow. So what are the key concepts you need to understand? Let's start with risk and return. Generally, higher potential returns come with higher risks. Next up, diversification. Don't put all your eggs in one basket. Spread your investments across different asset classes to reduce risk. Asset allocation is another biggie. This is how you divide your investments among different asset types like stocks and bonds. Your time horizon, or how long you plan to invest before you need the money, also matters a lot. The longer you invest, the more you can benefit from compounding, where your earnings generate even more earnings. And don't forget about dollar cost averaging, which means investing fixed amounts regularly to smooth out the highs and lows of the market. Now let's look at some common types of investments for beginners. Stocks are shares of companies with growth potential. Bonds are essentially loans you give to entities in return for interest payments. Mutual funds are professionally managed portfolios, while ETFs are funds traded like stocks, often tracking specific indexes. Index funds passively track the performance of a market index, and real estate can be through direct property ownership or REITs for income and appreciation. So how do you start investing? First, define your financial goals. Assess your risk tolerance, how much risk you're willing to take. Educate yourself about investing basics. Build an emergency fund before you dive in, and make sure to pay down any high-interest debt. Choose an investment account like a brokerage account or an IRA. Start small, invest consistently, and diversify your portfolio. Think long-term, rebalance periodically, and stay informed about market trends. Finally, let's talk about common mistakes newbie investors make. Don't invest without a plan, and avoid trying to time the market. Emotions should never drive your investment decisions. Diversification isn't optional, ignoring it can be costly. Be mindful of fees and expenses and don't chase hot investment trends, and most importantly, never invest money you can't afford to lose. Remember, this video is for informational purposes only. Always consult with a qualified financial advisor for personalized advice. Happy investing!